Exciting key announcements from Hot Chile around their Costa Fuego copper gold project on the Chilean coast. Now, you may remember this project is a real standout in the copper development space and is one of S&P's top 10 undeveloped resources. This is major project optionality in a low altitude environment and is one of the very few plus 100,000 ton copper projects outside of the control of majors with over 10 years of de-risking and an already naturally de-risked project. Now, firstly, Osisko Gold Royalties in Hot Chile are closing on an investment agreement of US $50 million, which provides Hot Chile with 12 to 18 months of funding for their growth and development activities. And this, alongside cash on hand, points to a treasury of about 26 million Australian dollars. Now, considering Hot Chile's market cap is US $80 million, this is a strong endorsement and provides clear look-through value. In parallel, Hot Chile has released a very detailed PEA with some strong economics, especially from the perspective of the space they're in, which is that of a critical metal for world decarbonization, and also considering the declining grades and lack of major copper discoveries in the past 20 years. So let's take a look at some of the numbers and highlights coming out of this milestone. Now, this project has a strong revenue profile over an initial 16-year mine life, 1.4 million tons copper, with primary production averaging over 100,000 tons annual copper equivalent. Low C1 cash cost of US $1.33 per pound copper, net of byproduct credits, and post-tax NPV of US 1.1 billion, resulting in an IRR of 21%. Now, that's using an 8% discount rate at a quite reasonable $3.85 per pound copper price. This is also a highly leveraged copper price. So essentially, for every 10 cents per pound above that 385, you'll see an additional US $100 million in post-tax NPV, and that's still at that 8% discount rate. Costa Fuego is also one of the world's lowest capital intensity major copper development projects. And with the completion of this PEA, it's important to mention that Hot Chile is looking towards a pre-feasibility study very soon, and a significant amount of the work streams required to support this PFS are already complete. We're talking 80%, with minimal study costs remaining. So let me fly you through the project itself so you can really grasp the synergy. And for the first time, all of the resources have been combined into a production hub called Costa Fuego. If we dive down into Cortadera, this is the project's porphyry crown jewel, which has been a key factor in transforming Hot Chile's resource base and has a long strike potential. 65% of the production feed from across Costa Fuego is from open pits, and with a combination of flotation and leaching, the schedule has flexibility that lowers operational risk. Now, less than 20 kilometers from Cortadera is Productura. Initial mine phases here will target high-grade, near-surface material, and this forms the front end of the Costa Fuego mining schedule. The project is also low arsenic, with 85% of the total revenue from copper and US 1.9 billion revenue generated from byproducts of gold, molybdenum, and silver. Now, San Antonio is the high-grade satellite project adjacent to Cortadera, within approximately a 10-kilometer radius, completes the Costa Fuego hub with its maiden resource from 2022. Total revenue generated over life of mine is US $13.5 billion. 97% of the production feed is from indicated classified resources, a total measured and indicated resource of 725 million tons at 0.47% copper equivalent. That's 2.75 million tons contain copper and about 2.6 million contained ounces of gold. The synergies between Productura and Cortadera have enabled an efficient schedule to target that high grade early on, which contributes to that 3.5-year payback, and it brings the block cave into production in year 8. Now, touching on the Costa Fuego hub site infrastructure now, this is a centralized, compact footprint. Heap leach and SXEW plant facilities will sit at Productura. Waste rock will be disposed adjacent to open pits or within mined-out areas, and the majority of the tailing storage will be constrained by natural topography located to the north of Productura. Now let's shift towards Costa Fuego's powerful infrastructure advantages. Its 10 years long key permitting de-risking and strong focus on ESG initiatives. This project enjoys a massive low altitude advantage, which lowers that economic hurdle. It's also 50 kilometers from port, with access to the coast and physical surface rights granted. Access to power has been established, enabling the project to run on 100% renewables. The low energy intensive decision to use raw seawater means no requirement for desalination, and a bonus 2% better recovery via this method based on initial test work. So we're looking at, low environmental impact and reduced energy, a project resilient to climate risk, i.e. an unlimited seawater source, and no need for expensive high altitude pipelines with pumping or calibration stations. Essentially, this is half the operating cost of a high altitude freshwater scenario. So not only does this mean a very green footprint, but they've also skipped about $1 billion in CapEx on this project, which has really driven that low capital intensity. Now, Hot Chili has long partnered with local communities, providing mental health support, funding for orphanages, fresh water for irrigation, and a commitment to utilizing local goods and services. Now, in terms of next steps, funding will be used to focus on expansion of the resource along strike, development drilling for the PFS, and further delineation of the low-grade halos surrounding Cortadera to investigate the potential for a large open pit option. This could potentially materially increase the mine life and scale of Costa Fuego. Now, timeline-wise, Hot Chili aims to execute on a mineral resource upgrade by the end of the year and to deliver that pre-feasibility study in 2024. This PEA is really an important line in the sand alongside Glencore's strategic shareholding, and it really demonstrates Costa Fuego's global relevance and its potential to deliver near-term, meaningful new copper supply. It cements Hot Chili's position as the largest copper developer listed on the ASX by both resource size and potential scale of copper production. For a copper project, it's low cost, it's low risk, it's long life, it's large scale, and it's extremely leveraged to both resource growth and copper price appreciation. So stay tuned. The next 18 months look to be very exciting for this group. Reach out anytime to the Hot Chili team. They would love to connect.